What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Friday, May 10th. All right, guys, SPY here today, up $2.98 per share. That's plus 0.58% in regular trading hours. It's up a little bit, 30 cents or so here in the after hours. Actually closer to 40 cents. Now, listen, guys, as always, take the after hours movement with a grain of salt. The reason being, volume, right, is always going to be very, very low, at least typically. We actually saw a little bit of sustained volume through the after hours, and then it, of course, tanked off as the move continued. So just take it easy on that after hours movement. Whether you're positioned long or short, just take it easy. That volume is going to be low. So let's take a look here. Let's do our volume profile analysis. We do that to pull out any directional bias that we can, taking a look under the hood, so to speak, in bias that we can't really pull directly from the price action. We'll take a look at the psychological levels that we need to be paying attention to because big money's, of course, watching. And then we'll look at implied volatility, in particular for you options traders, and then expected move and the directional bias coming out of the chain is where we'll finish up. So let's get started here with this 5-minute chart with the volume profile. Listen, by the way, if you guys are new here, SPY is a daily upload. My goal here is to hit 10,000 subscribers, so I appreciate you subscribing to the channel, and I'll keep the SPY videos coming daily. Now, if we take a look at this, let's just look at the intraday session when the volume really pours in, and we'll go from left to right. You can see here that off the open, it was actually a little bit of an odd open today. We had, compared to yesterday, a slightly lower volume open, but the volume hung on a little more so than is typical, a little deeper into the day, but it was on seemingly random candles. And it was honestly a very mixed bag here. You see this volume off the open, that's normal. Then we see red volume kind of peak, green volume peak, red volume hang on, fade, a green volume pop, very random. And the truth is really not much bias at all. Moving through the rest of the day, these two, too much of a risk to assign any bias to those. They're not definitive enough. But moving into the close, we saw the green volume really start to pick up. Now, if we compare this to yesterday, guys, the volume here was nearly twice what it was on the closing bar compared to yesterday, nearly 2x today. You guys know that closing bar, I tend to look at that as a rebalancing bar on SPY. That bar right before the bell goes off, that's when a lot of algorithms, at least on SPY, this is a little different from blue chips. Blue chips tends to happen immediately after the bell. But here, we tend to get that rebalancing volume, a lot of buying and selling occurring on the same bar right before the bell. But this is slightly higher volume. Not even slightly, it's relatively high volume compared to what we might get just on any old day. Now, one thing we should check is that red bar immediately after the close, and you can see a lot of wicks and just barely a red bar, essentially a neutral bar. So what I'm going to do here is I'm just going to say, you know what, we saw a little bit of bullish bias heading into the close, and this red bar does not really throw that off because it was such a small movement with quite a few wicks, and then we kind of continued a little bit higher. But honestly, guys, that's really all the bias that we got today. So let's move on here to the 30-minute. We'll take a look at those psychological self-fulfilling prophecy levels that we should be watching, because that the funds and institutions, all the retail traders are going to be paying attention to the most obvious ones. So those are the ones that we'll look at here. You see on the 30-minute, guys, yesterday on SPY, we were talking about how we just barely were holding that 50 period. Well, today off the open, we tested it, ripped higher, and never looked back. Now, that 50 period is getting dragged up behind the ETF. That's a good thing to see if you are bullish, right? Because we want to be in a position where the 200 period and the 50 period are both ascending with the stock or the ETF, in this case, above both, treating the higher one, the 50, as the support level moving higher. And we're currently kind of setting up for a situation like that here on the 30-minute. But listen, tomorrow, bulls, if we see a retest of that 50 period, as always, in a case like this, I don't care what volume we tested on. I just want to see the 50 period bounce as clean as possible and on as much volume as possible. Okay. Second thing that I'm watching from a bullish perspective, ideally I want to see the 50 period move as high as possible throughout the day, with the ETF remaining above it, of course. Now, bears, honestly, in this case, where the 50 period goes, I'm not all that concerned with from a bearish perspective, because my really only concern as a bear is to break it back downside wherever that ends up being, whether it's at 518.50, 519, 520, 521, wherever we meet it, if we see a meet at all, a test of it, right? I don't care as long as we break downside through, ripping down on high volume. You tend to see higher volume on breaks, and then seeing a lower volume retest back to the upside of the 50 period, right? And then a high volume rejection downside, treating that 50 period again as resistance, which would set you bears up for a potential downside test in the near term of the 200 period here on the 30 minute. Right now, the 4-hour chart, honestly, guys, not all that relevant right now. If we look here, the nearest level is that 200 period, and it's about 1.7%. That's a very big day on SPY. Anything over 1% tends to be a pretty volatile day on at least SPY. The Qs tend to be a little bit more volatile. SPY, though, 1% or higher in either direction is a relatively decent move intraday. So listen, I'm watching the 4-hour in case it comes back into play. Of course, a similar situation. You guys know the drill, right? I want to see them hold as support if I'm a bull, and I'd like to see them break if I'm a bear, but it's nearly 2% away, and that's a big move on SPY. But if that comes into play, of course, I'll be watching the 4-hour bulls. A good thing to see, we're now getting to the point where I would like to see the 50 period start crossing over the 200 period, not for the sake of the crossover, but just for the sake of having the quicker moving 50 period compared to the 200 period, getting closer and closer to the current price of the ETF, meaning getting some psychological barriers back to the downside up as close to the higher price as possible. Now, the most important chart of all, let's take a look at the daily. Really quick, guys, tomorrow morning, we have a few macro things going on, so let me just take you through that really quick. 30 minutes after the market opens, so it's 10 a.m. Eastern time, we have the University of Michigan sentiment preliminary read. The forecast for that is 76.2, and the previous was 77.2. So I'll be watching that. That hits at 10 a.m. Eastern time sharp, and that is a market moving number. It's not tremendous, but it moves the market each time. At that same time, 10 a.m., all these times will be Eastern time, by the way. 10 a.m., we expect the Fed's Kashkari to start speaking. At the same time, 10 a.m., Fed's Logan is expected to speak. At 12:45, Fed's Goolsby. At 1:30, the Fed's Barr. And at 2:15, the Fed's Kashkari and Goolsby are speaking again. Okay, and then to circle back to the morning time, kind of a smaller event, 30 minutes before the market opens, we expect the Fed's Bowman to speak. So a lot of Fed talk here tomorrow. Perhaps expect some little periodic hits of volatility throughout the day, but there, of course, it's not expected when those members speak. It's not expected to move like when Powell speaks. Okay, now here on the daily, guys, you guys remember that we've been talking about this 50-day moving average quite a bit, and we're starting to pull away just a little bit. This is really good. We broke and held just above 520 here today. That's good. Every $5 on SPY has a tendency of being a bit of a psychological read. Okay, and that next one is 525, which is an all-time high. Okay, so that 525 number is really the next number that I'm watching to the upside. Back to the downside, guys, I'm paying attention to 515 and the 50-day moving average. So listen, bulls, if we can get a little bit of a volatile day, maybe a 1% upside move or so, moving up, about 0.9%, that would lock in an all-time high, and that would be obviously like best case scenario in terms of sentiment and feel of the market for a bull. For you bears, really two things I'm absolutely considering is 520 I would like to hold beneath, but if we end up breaking and running tomorrow, if you're a bear, what you don't want is the bulls to be feeling good, which means what you don't want is an all-time high, of course. So, bears, really anything except an all-time high is, you could sort of consider a win. A real mediocre win would be a breaking beneath and holding beneath 520. And I think a big win for you guys tomorrow would be breaking beneath and holding 515, because that would be off a relatively volatile day as well. And that would set you bears up for a downside test of the 50-day moving average, which is kind of that next big level back to the downside. Now, implied volatility compared to the last couple of months, guys, down again today. It's very low. So if you're getting IV crushed, this is why. If you're looking to buy new contracts, conditions are more favorable because you're paying less Vega value up front. All right, that goes for both calls and puts. Now, expected move here on SPY, of course, we have the luxury of daily expirations. We have May 10th through tomorrow. And the expected move by tomorrow's close compared to today's close is plus or minus $2.32 per share. All right. So certainly not a full percent in either direction, but that's what the market's expecting tomorrow in terms of volatility, which is, actually it's crucial information to know, especially if you want to have the edge or any kind of advantage trading options in particular. Now, you might be thinking, what about directional bias, right? Well, we can look at the volume. So 7.2 million total contracts were traded today. We had 3.2 million calls and about 4 million puts. Okay, so we are seeing a bearish bias on the overall ratio, but if we break that down by time frame, listen, it gets even more dramatic. The short-term speculators, we had 951,000 calls and 1.97 million puts. That's a relatively dramatic bearish bias out of the short-term speculators here today. Understand it's one factor out of many that we just looked at, but I tend to consider, especially on SPY where volume's high, I tend to consider these ratios here, because that's quite literally what the volume is coming in as and what the traders are trading. Now, someone asked a really good question last night in the comment section. They asked, how do we account for spreads that maybe beef up volume on either the call or put side, but have a different directional bias? And it's a very good question. So the way that I look at this is you're going to have hedging. You're going to have people that are positioned long buying puts to hedge, okay, and vice versa. Now, the way that I look at hedging is that, and this comes very much so in handy with the unusual options activity alerts as well, is that typically most people and most institutions, they hedge when they feel a need to hedge. Okay, it's not every day that you're going to go blow a bunch of money on puts when you have a long position, without feeling the need for downside protection, right? Because even if someone is positioned heavy long and they don't want to liquidate it for tax purposes or something of that nature, I mean, would they, if they're extraordinarily bullish, most of the time, most people, most managers wouldn't hedge unless they saw some reason to. So you can have a long-term long position, but still be bearish short-term and be hedging. So what it tells us, even if we're seeing some of those puts, for example, as hedges, it tells us that they may and likely have a short-term bearish bias, even if it is just a hedge. So for the most part, hedging to me still tells the same story as far as sentiment is concerned. Now, spreads are one of those things that are always going to be in the mix. However, on most days, especially when we're dealing with big volumes like this, directional spreads that have opposite directional bias of what you might expect from the underlying call or put, most days they're not going to make up the majority of volume. And it's reasonable to make the assumption, since we can't really do a whole lot better than making a reasonable assumption in this case, that they're going to be relatively evenly spread between calls and puts. Okay, so they're in there and we deal with that, but I still like to look at the volume totals, because I think with a giant sample size, those little nuances, they tend to kind of work themselves out anyway, especially the bigger the sample size of volume, which is why I'm always very clear, and I try to stress the importance of the higher the volume, the less I take that information with a grain of salt, right? So SPY, for example, typically has a lot of volume. So listen, guys, if you're getting value out of these daily SPY uploads, I ask you to do one thing, please. Leave a like on the video and then get out of here and enjoy your day. I greatly appreciate it, and I'll see you in the next one.